Shares of Cleveland-Cliffs surging almost 10% today as JPMorgan reiterates it as their top pick. It's one of our calls of the day. Jim Lebenthal, obviously, it's yours. I'm not going to mention who sold it recently and provoke an outburst on Twitter or anywhere else. We know who we're talking about, but we're not even going to mention his name. We're not even going to mention his name.
Voldemort. Okay,
because he generally watches this show. I agree. I just don't want to deal with it.
I agree. I agree. It's been a rough go for that guy anyway.
$44 is their price target now. They raise it from $37. Yeah. They say it's a clear top pick.
Let's do a little tutorial on stock analysis and stock picking, okay? You go back a week ago and they presented at the JPMorgan Industrials Conference, and they told you something there. They told you they did $588 million of EBITDA in January. The analyst estimates for the first quarter EBITDA are $1.3 billion. So they almost did half of that estimate in January when steel prices were depressed, and now you're post-Ukraine when steel prices are surging. They're going to blow these estimates out of the water. And you could have picked that up last week. And if you didn't go to the conference, you could have picked it up on Monday when JPMorgan put it in published research. This is all public data. You can do this work if you're a stock picker. Now, you can do more stock picker work. You can go back to the fourth quarter earnings report. After that report, the stock was down 10%, okay? And that was about 35 percentage points ago. Everybody got down on the stock because they did some maintenance in the fourth quarter, which was the smartest thing to do because all of their orders are coming in the first quarter. So get the maintenance done so you can produce at a breakneck speed when prices are going up. It all comes down to excellent management. Lorenzo Gonçalves is truly a genius. But if you are a stock picker and you're doing more than just licking your finger and putting it in the wind, but you're looking at 10 Qs and you're talking to management, you can find these things out.
Well, I mean, obviously not everybody can talk to management and have some of the access that people like you have. Let me ask you this.
I have no material non-public information. This is important. I have no material non-public information.
I'm not suggesting in any way that you did, and I didn't mean it to be portrayed that way at all. Just I'm saying that not everybody has access to be able to talk to the CEO. That's just a fact.
Yes, but through Reg FD, anything that management says to me has to be publicly disseminated. Let me be more helpful here, Scott. There is nothing that indicates these results are going to turn down in the future.
Okay.
Not with the amount of infrastructure and factories being built.
Which then answers my next question, $32.49. That's what the stock hit today, a new 52-week high. You're comfortable telling people today to buy this stock fresh here?
Well, remember, I hold this, and this is my largest position. Haven't sold a share, even though it's up something like 800% over the last 2 years. Would I add more today? No, I'd wait for a pullback. But I'm not selling today. I think this is a mid to high 30s stock before I sell a share.
Two totally different questions. Whether you would sell it today versus whether somebody who's watching you today, as much conviction as you have, should buy it today. Those are two entirely different conversations. Now, let's move.
If you don't own it, you should nibble.
I thought you just said you should wait till it pulls back.
Yeah, well, you know what? Nibble a little bit. Let it pull back and add to it. If I'm not selling a share, and I think it's going to the mid to high 30s at $31.95, which is where it is right now, if you do not own shares, you can buy it right here.
Okay. I knew this dude was a nibbler.
Okay. All right. Let's talk about other calls that JPMorgan made today. They lower their estimates on Ford and GM. They lower their estimates on lower production, higher commodities, and greater reimbursement of supplier costs. They still maintain overweight on both Ford and General Motors. They cut the price target in Ford by $1. No big whoop. On General Motors, they cut it by $5 to 75 from 80. Josh, you first. We know that Jim owns this stock, but so do you in terms of General Motors.
Yeah, this feels late-ish. The stock's down 20 points from its January 4th high. I don't really understand what they think has already been priced in, if not exactly what they're saying today. None of this is a secret. The whole world understands that the cost structure has gone up. We're all clear on that. I think that's been more than discounted into the share price in just the last 3 months. I'm assuming Jim agrees. Maybe.
I know Jim is going to be positive on. He's going to tell you all the 55 reasons as to why you should own General Motors. Jason Snipe, you don't own any of these automakers. Why?
Yeah, I mean, I used to own auto parts last summer, so obviously that was kind of on the play of, everything had been shut down. Well, actually 2 summers ago when everything was shut down and everyone's kind of working on their cars. But generally speaking, I could agree with this call, with input costs going up on obviously all the intimate, parts that go into these cars, and raising the price of them. Yeah, I mean, I could totally see how this might not work. And, we just haven't been in autos for almost 2 years now. So
Okay.
that's really our play there.
Fair enough. And look, I know one of the reasons why Jim is positive is because of the EV play that especially General Motors provides. So I'm looking at these comments today to our producer from one Bryn Talkington, who said, and I quote, "These companies are not delivering any electric vehicles. Tesla is actually making them and selling them. That's why I don't own Ford or GM. I own a Tesla car, and Jim is still waiting for his caddy." Those are her words to the producer, word for word. Bryn, I'll let you expand on that, and then I'll let Jim have a crack at this apple.
Yeah, we're a multi-car family, but I definitely love the technology that Elon Musk has. I think Jim will correct me, or Josh if I'm wrong, I think GM delivered 26 EVs in the fourth quarter of 2021. And I don't know if Ford delivered any. I know GM delivered 1 Hummer. So they are talking about this, and they're going to do it eventually, but they're not. And I think investors are investing, waiting for that to happen. But you don't go from delivering 26 in one quarter to 200,000 in the next quarter. And so the way we are playing this is through LIT, which is a Global X lithium ETF that invests not only in companies like Albemarle and the other lithium miners, but you also get the battery producers. And so to me, I want to buy what's under the hood that is in high demand versus I think what's going to be a low margin business that is yet to even play out.
I also want to correct something. It says GM target on your screen cut to 22. It's Ford that was cut to 22. GM was cut to 75 from 80. So I just want to make sure we're all on the same page there. All right, Jim, ball's yours. I'll give you the keys. How about that? Go ahead.
Well, based on today's performance from everyone, I think the only person who's going to go for a ride with me in my new Lyric when it gets delivered is Jason Snipe. Okay, so Jason, you and I will go out. We'll have a good time. But actually, Bryn makes a fabulous point. I am still waiting on my Lyric, and that does bother me. In the meantime, the legacy internal combustion business is going strong. Now, there's a big problem with production. We know that, right? Because of semiconductors and palladiums. But the last several quarters have shown that you can generate record earnings at these companies, even at these low production levels, because people need cars. The demand is there, and they need pickup trucks for all the factories that are being built out there. So earnings are going to hang in there because of higher prices that offset lower volume.